In this video, guys, I'm going to talk about struggling to walk away when you hit your max daily loss limit. Stick around. Hey traders, warm welcome to you. All right, so we touched on this briefly. And it's, hey, hit my max daily loss limit early on in the day, frustrated. One of the traders was talking about this. I find it hard to walk away from the screen. This is so common. This is so common. And guys, I've been there, I've done that, I've felt the pain of this. So what am I actually talking about? You have risk rules and you say, hey, I'm only going to risk, let's say $1,000 a day in your trading. You're okay, right off I go. And you trade the open, you just misjudge the open and you lose $1,000 in the first 15 minutes. And then you're in a situation where on one hand, you're stopped out for the day. You should be done for the day. You've created your rules, you've created your structure, and that's it. Walk away. Your max loss is there for a reason. It's to protect your capital. You're not performing, get away. But then there's another voice on this side, and this side is saying, yeah, but look at the opportunity. Look at all the trades left. You could easily make that back and make 5 times more. Just stay, just make one more trade. Just do one more thing. And you've got this decision to make. And the easiest thing to do is to say, yeah, you're right. I'll just risk a couple $100 on the next trade, just see how it goes. And maybe then you're down 1,500, then maybe you're down 2, 3, 4. The point, it doesn't matter, it's that you've broken the rule. You have decided to override the rule that you set. It's super hard to say, you know what, I am frustrated. I am at my max loss limit for the day and I know I've got to walk away. I don't want to, every bone in my body wants me to stay and trade this market because you love to trade and there's opportunity and it's this and that and the other, but I need to walk away. And that's the professional thing to do. So I'm going to give you a couple of analogies. The first is, if you imagine you're a professional football player, right? You're playing football, soccer for you guys across the pond, but you're playing football and you're just giving away a few balls. You're just getting a few reckless tackles in and the whistle goes and it's a throw in and there's a substitution and he says, hey, come off, you're on the bench now. You're like, what? And you're already angry because you've missed tackles, because people are taking the ball off you, because maybe you've missed a goal, maybe you're making a few reckless errors. You're already frustrated. You're like, hang on a second, I've still got another 45 minutes left to play. I've still got another hour left to play. What? And in your mind, you're going, I want to stay. I want to recover this game. But the coach knows best. The manager knows best. He is seeing things from a bigger picture and he's saying, you are not performing and actually you are dangerous now. You might end up getting a red card and then not being able to play the next game. You might end up giving a goal away and ruining the game for us. You might end up getting injured or injuring someone. Get off the pitch. And that's the same thing with trading, except the difference is you don't have a risk manager tapping you on the shoulder saying, hey, son, you're done. Get out. Come back tomorrow. You are your own risk manager, which is why it's so hard and why you have that internal conversation. Because imagine a professional football player out on the pitch and he's like, I know I'm not performing, I really should sit this one out. And he's not going to, he's going to try and keep playing and playing and playing. It's human nature because we want to trade. We want to be involved in the markets. We want to trade. It's what we love, it's what we do, it's what we're passionate about, it's what makes us money. And so it goes against the grain to step away. Same with the football. He wants to score, he wants to play, he wants to be, win, he wants to be on the team, he wants to be all this stuff. But at that point in time, you're just out of sync with the market. You're doing damage and you've done enough damage as it is, and you are likely to do significantly more damage. So the right thing to do is to go on the sub bench, is to say, okay, yes, boss, I'm coming off the screen. I'm coming away from the screen. I'm coming off the pitch. And thinking about it like that, saying to yourself, hey, this is how the pros separate themselves. It's not the performance. The performance is very similar for a lot of times between kind of retail pro for a lot of it. Once you get over that initial hurdle of some kind of strategy and all this kind of stuff, it's not dissimilar. Where the differentiator comes is, number one, pressing on the best plays, but that's something different. But one of the differentiators is knowing when to get away and say, it's not working. I am not in tune with the market. I have made an error. I need to take my medicine and walk away from the screen. That's the difference. And so whilst you're in front of that screen, whilst you're there and you've hit that daily loss limit, like I'm down $1,000, it's only 30 minutes and I've got a whole trading day and I've just ruined the whole trading day, I should stay. You've got to think to yourself, this is now the test to react correctly. I don't have a risk manager tapping me on the shoulder, shutting me out of my account in the prop firm, get home. I don't have a manager on the next blow of the whistle saying, hey, you're subbed off. You've got to step up to the plate as that risk manager. You've got to step up to the plate as the manager, the risk manager, the controller, whatever you want to do, want to call it, and say, hey, you're done. You're done for the day. Now, there's a few tricks you can do to do this. What is the thing down in your mind that the test is the test, the test, the test, the test? It's the test. If I pass the test, I'm going to move forward. The other is to say this, and this is kind of an operational thing. You can say, right, I've got £1,000 loss limit for the day. Now, what you might do is you might split that up and say, hey, I've got £1,000 loss limit for the day. I'm allowed 750 in the morning, and then I have to have a 2-hour break before I can come in and trade the final 250, or something of that similar nature. Or you say it's £1,000 loss limit. I'm allowed £1,000, then I can come back and I've got $100 left, or whatever it may be. So you're still around the same sort of level. So you can. It doesn't have to be so brutal. You can say, okay, I'll still have one bullet left. But the danger is that is if your chimp takes over and he thinks he can carry on trading and doing damage, don't do that. But if you need to play the game of nuances and say, okay, maybe there's a risk limit for the morning, maybe there's a risk limit for kind of the evening session, the closed session, and I split them in two, or I'm allowed the whole limit in there, or whatever. You can play little games with that, but you still, however you do it, you still have that tricky decision to make of saying, hey, I need to walk away. I need to walk away from the screen. I am doing damage to the account. I am not in tune. Yes, I could recover from this, but if I do this 100 times in a row, the chances are I will end up doing damage to the account more than I've done already. I can accept this loss. It's not a problem. It's allowable loss. I've set it so it specifically can be recovered from. But if it's 10 times the amount, then all of a sudden my confidence has taken a massive hit. My equity curve has taken a massive hit, or whatever the conversation you have in your mind, or whatever that number is for you. So think about that. If you're a day trader, you have a max daily loss limit, and you hit it early on, just think, hey, the manager's calling, the risk manager is saying, get off, come back tomorrow, because that is in your best interests for the future trader that you're trying to become. Take care, guys. See you in the next one. Bye-bye.